Come on. Fuck. One more. Come on. Fuck. Shit. I can't take this. One more. Understand, market is not 100% and losses is part of the game. No matter which strategy you're using in chart, again, the market doesn't gonna give you the 100% result, and you're gonna have some losses even if you're a profitable trader. Look at this chart here. You can't see just one upside as a performance just go up, and as a good progress you're gonna see good results, maybe bad results, good income, bad income, good situation in life, bad situation in the life. So these bad things here are a retracement to teach you something. If you don't have these stuff in your progress, even in your trading in life, there is something wrong. So you should try to learn from it. After each stop loss that you take, ask yourself, what I took loss here, what I took the stop loss here. You're gonna have three just answer. Your answer gonna be one of these three. Emotional decision. As you saw, I took an emotional decision here. Didn't follow the trading plan. You just missed one rule, or you didn't follow your trading plan. And the third one is part of the game. That means you follow your risk management, your trading plan, but at the end of the day, you took the loss and it's part of the game. So if you took the loss as an emotional decision, you should focus to fix this, to don't repeat that mistake again. If you didn't follow your trading plan, you should remind yourself that you should follow your trading plan. If that's part of the game, it's part of the game. Again, market is not 100%. A profitable trader is a trader that is consistent. He believes in his trading plan, he believes in his strategy, and he is consistent. Open your eyes. This is the real world of trading.
Draws on liquidity is going to be the previous session. For example, all of this price action right here is the New York AM session, and you can see that most volatility came in when the previous session high was swept, because once a session high has been swept, we can then look to target the session low, because price looks for highs and lows. So if we can simplify this by looking at the previous session highs and lows, we can use that as a framework for our draws on liquidity. Another good example is if you look at the London session consolidation, which is happening inside the Asian session high and the Asian session low, nothing is going on here. So London session would not have been a session that you would want to trade. As opposed to when you get to the New York session and liquidity is swept of the previous session, you can look to engage inside that fair value gap, targeting all of this liquidity below. So set yourself a very simple rule. Mark out the previous session high and the previous session low and wait for either side to be swept, and then start framing setups to take price in the opposite direction. It doesn't work every single time, but this is going to help you with regards to not taking entries and taking better entries in here.
Point of interest, break of structure. Liquidity sweep, low time frame change of character. Order block. Liquidity sweep. Buy side liquidity. We enter the trade from the order block after the liquidity sweep, with our target set at the buy side liquidity. Follow for more breakdowns.
Dentro su XAUSD short. Chiudo 1500 euro. Vamos.
Avoid fake outs in trading. See, most traders buy at the break of structure, thinking price will continue higher. But in reality, it's just a fake out and it will reverse lower. So, how do we avoid this? By adding a candle body close filter. Whenever price breaks structure, you need to wait for the candle body to close above it. This confirms it was not just a liquidity grab for a reversal. Next, you need to identify a gap in the leg that broke structure, which in this case is right here. This ensures price is in a hurry to displace higher and will not be reversing. All that's left now is to enter long, then let price expand to a buy-side liquidity pool.
Right here. I was a little bit late, but that's fine. And I will target this high over here. So the reason for the entry, if you have a look, H1, we do have massive consolidation from last week. Okay, so price created fresh support, and after this support we had all HLC type support over here. All right, then from that support we've got actual breakout of internal high. All right, and that is the tricky part. A lot of traders, they can't find what is the actual external low which caused this breakout, so they mark this low, but that's wrong low. Why? Simply because that low didn't cause this highest high. So the actual low is this low, and that will be your external low over here. All right, and if you check M1 from this point, I'm gonna buy here one more. If you check M1 from this point, you can clearly see you've got the breakout over here. All right, and the low which caused this breakout is this low, so that will be your external low on M1 time frame. All right, but let's see how the trade plays out. Guys, make sure you follow for more content. One of the most important parts in SNR strategy is operation of time frames. Right, so you have to be flexible with all time frames. You have to know how to monitor lower time frame all the way up to higher time frame. So stay flexible with all three time frames. Watch out now how price will pump up. I will actually set the take profit to this low due to the fact price already created fresh sell engulfing over here, and price might react from that level, so it will be a little bit dangerous to hold your position all the way up to this resistance. We've got fresh resistance over here, and that will be tricky part. Let's go. Straight TP.
I'm in.
Order filled.
I'm in NQ sells. Need a nice flush to the downside. Stop loss above that level. Come on, act right, NQ. Don't do that. Nice. Beautiful, beautiful. Exactly what I was looking for. That's what I like to see. Beautiful, beautiful. And
Order filled.
I'm satisfied with my profits. I'm good. And of course I would have hit my full TP, but I was satisfied with my profit, so I just took what I had off the table. Oh man, I would have been so up, bro.
That is the exact strategy that I use to make $20,000 a month in less than 60 seconds. Let's get right into it. All right, first things first, you guys want to be on the 30-minute time frame, and once market opens at 9:30, you guys are going to wait for the first 30-minute candle to fully form. So boom, right here's the first 30-minute candle. As you can see, the 9:30 candle. Now, once this 9:30 candle fully forms, you're going to draw the high, and you're going to draw the low of that candle. Once you have the high and the low, you're going to swap to the 5-minute time frame. Now, all you're going to do on the 5-minute time frame is you're going to wait for a break and a close outside of this range. So I'm going to let this play. Let's see what way it wants to break. Right here, it broke the range, but the candle didn't close, so we wouldn't take that. Right here, we have a break and a close outside of the range. PA is telling me that this wants to continue down, so I'm going to enter short right here. Now I'm going to target a 1 to 3 RR. Let's see how this trade plays out. Boom. Just like that.
Beautiful. That was very basic. You know, mark out the highs of a 30-minute orb, mark out the lows of a 30-minute orb, go to the 5-minute. Some different time frame analysis. Orb is king.
The London kill zone runs from 10 a.m. to 12 p.m. Eastern Time. But within these 2 hours lies a very specific and powerful time window that can help you catch insane scalps. And after 7 years of trading, I've come to call this time window the golden hour. Here's how it works. We break down the London close kill zone into 2 key hours. First, 9 a.m. to 10 a.m. This hour acts as our range setting period. Then 10 a.m. to 11 a.m. This is the golden hour, where the real action happens. During the first 9 to 10 p.m. hour, price typically consolidates to build orders. But then as soon as the golden hour hits, price goes into action. It sweeps the range low, goes into a discount, and sets up the perfect entry to target the range high. This is time meeting price. Now, using the golden hour system, not only can you master day trading London, but you can also master Asia from 8 p.m. to 12 a.m., London from 2 a.m. to 5 a.m., and New York from 7 a.m. to 10 a.m. That's because all these sessions have their own golden hours. So read the caption below to get their exact time. According to ICT, the London kill zone runs from 10 a.m. to 12 p.m. Eastern Time. But within these 2 hours lies a very specific and powerful time window that can help you catch insane scalps. And after 7 years of trading, I've come to call this time window the golden hour. Here's how it works. We break down the London close kill zone into 2 key hours. First, 9 a.m. to 10 a.m. This hour acts as our range setting period. Then 10 a.m. to 11 a.m. This is the golden hour.
Let's say I'm a funded trader because we just passed phase 2. The profit target was $500, and as you can see, we just made $502 from the first 2 trades. One made $55, another one made $218, and another one made $227. Right now, I'm just patiently waiting for my live account credentials. This trade was a long trade because as you can see, it went up, came down, but then I decided to remove my stop loss because I trusted this trade. Went up, came down, still didn't close, and guess what? Went straight to our take profit and NFP hit. So it took us 3 days to pass phase 1 and 1 day to pass phase 2.
In the ORB, don't make these 2 mistakes. The first mistake is fixating way too much on the 15-minute high and low and fixating on those levels. If you find yourself entering too early on a lot of trades and getting shaken out of most moves, this is probably the mistake you're making. Instead, I like the market to show me a true high and a true low, which many times takes longer than 15 minutes, and this establishes where my ORB upper level will be and lower level. And then the second thing is I don't focus too much on wicks. The levels I like to key off of are more of the candle body high and candle body low. The reasoning behind this is we can generally see that the buying is happening more in a range of price. So in this example, when we see price break into that range of buying pressure and close within it, I know that buying is weakening and this could be my opportunity to start a short trade. And by making those 2 adjustments in your trade, it can make a massive difference in performance each and every day.
1 candle to trade every single day. I mean, it is so stupid simple. And I mean that in the best way possible, because after 9 years in the markets, what I've learned is that stupid simple always wins. The more you try to force complexity, the more money you're going to lose. So here's what made everything finally click for me. It's called the first candle rule, and it uses the first 30-minute candle of the day to give you your entire trade, as in where to enter, where to put your stop, and what to target. Here's how it works. Each day after the 9:30 a.m. open, we mark out the high and the low of the first 30-minute candle, because the first 30 minutes of the day is the highest volume of the entire session. Then we drop to the 5-minute chart and we wait for the price to either trade into the high or the low. And after that, in order to get confirmation to enter a trade, we need to see a fair value gap back into the range. And that's our confirmation to enter, because this tells us that the market is moving with a lot of force after reacting to liquidity from the first 30 minutes of the day. Our stop goes at the lowest candle bodies on the 5-minute chart, and we target a fixed 2-to-1 risk to reward. No overthinking, no complicating, just one stupid simple move repeated every single day to finally become a profitable trader. You need to save this post. That way, when it comes time to trade, you have this strategy ready.
Short right here.
Order filled.
Stop above there. Take profit down here. Let's keep pushing. I just need that break. Might move my stops to break even here. I'm not ready to lose anything. Let me stop that break even here. Not yet. Let's go. Let's sink, let's sink, let's sink.
Order filled.
Boom. Beautiful trade, beautiful trade, beautiful trade. Follow for more trading content. Peace out.
Order fill. Alright, so I'm in this buy. Amazing momentum here. We're up $1,000, bro. That is looking beautiful. Nice, nice. We're up. TP is pretty close, so let's just wait until TP get hit. Alright, there we go. TP just got smacked. That was a beautiful trade. I think we made over $2,000 right there. If you guys like the vid, leave a like, subscribe, comment, and share. Peace and love. I'm out.
SMC, Wyckoff, the truth is that none of these are going to make you a profitable trader. Now, it's not because they don't work, it's because they don't highlight the required process that you need to go through to become a profitable trader. Number one is identifying price behaviors that repeat themselves, such as the Asia sweep, liquidity continuations, and then collecting data on those, such as the time of day they are most likely to occur, the sweep in pips, the average duration, and then with that data, build data-driven risk parameters that allow you to build a risk model around that price behavior. Now, once you have that, you can internalize market experiences through live interactions, which allow you to build a deeper connection with the flow and delivery of price. Now, once you do that over and over again, each time you will increase your market awareness and most likely increase your profitability in the market.
You're in.
I'm in.
Nice.
Still in. Somehow.
Still in.
Still in.
You're still in?
Yeah, don't know how.
That'll be jokes. Might actually.
No way.
Three tips to avoid fake outs. Number one, if we get a candle break out of this key range here, but it breaks out with little to no top wick, there's a high probability that it's just going to reject back into the range. Number two, if we look here, we can say that we're clearly in an uptrend on the higher time frames. Then we got caught in this range, but then all of a sudden a candle breaks out to the downside against the overall trend. That will keep me out of a trade. I won't want to go against the trend. And number three, let's say we've moved our way up and we're up here, and then all of a sudden a candle rejects and breaks all the way back through support, moving from resistance just one color, red. I'll stand that one down because I know there's a high probability that it needs to create a green candle before it continues down further. And that's three things that keep me out of potentially getting faked out.
A trade on GU 1 minute, and yeah, let's see how this trade plays out. I'm excited for this trade because this is a really good setup. Need this to push down. So I've been learning how to be very, very disciplined. Like if it hits my TP, it hits my TP. If it hits my stop loss, it hits my stop loss. Like I don't mind. I just try to like enjoy the process. Yeah, this might be wraps, and that's okay. So guys, make sure you follow me to see more.
Doing every single day just by using this simple technique. And it makes trading gold feel so easy, it genuinely feels like a glitch in the market. Like I have an absurdly high win rate just by using this one simple confluence. And in the next minute, I'm going to show you exactly how to use it. So whenever you're looking to take a trade on gold, you first need to look at how DXY is moving. You should already know by now that gold and DXY have an inverse correlation. So when DXY moves bearish, gold moves bullish. I'm going to show you two ways how to use this correlation. The first way is just to look for an inversion of your entry model on DXY. Whereas if I was looking for a sell on gold, I'd want to see it shift bearish. I can look for a shift bullish on DXY, where I'd want it to break this low and then break this high to push bullish. So for example, I'd wait for us to break this high for a nice type 3 shift bullish on DXY. And this one simple correlation massively increases my probabilities of gold moving in my favor. If we go back to DXY, we can also see that it also pushed bullish, but we can also take this one step further, because what should you do if both gold and DXY are both moving in a similar direction? This is where the second way I use DXY comes in. So if you see a mismatch in the volume between gold
gold and DXY, where on DXY we have this big push up, but on gold it's only a small little correction. So we needed this massive move on DXY just to have this small little bearish correction on gold. This means if we have a small little pullback on DXY, we can expect a massive push on gold. And so if we just go back and look for a little correction on DXY, we can see that gold has had this massive push up just from the small little pullback on DXY.
So again, I just ended up getting stopped out. I'm gonna go ahead and add into this position here. If we break back above this trend line, I'll get out. I do want to see if we can come down to 19,800. There we go, there we go, there we go, there we go. Trailing very tightly now. Trailing very tightly. Very tightly on this position. We're up about almost 200 ticks on this. Still trailing pretty tightly on this. Trailing tightly still. Up about 237 ticks on this position. I ended up getting stopped out of that first position. Because my stop was a little bit too tight, but that was nice. Hit about 220 ticks on that position.
Yeah. Stop loss will be above this high, and I will target below this low. What's the reason? The reason is we've got sell engulfing over here, and we had last external low, and we've got the breakout of that external low. So I'm expecting price has to retest this support area. We've got little roadblock right here. We'll see who stays or goes. I don't wanna be outside. I need someone that can keep me home. Yo, I feel so close, but so far. Here's the thing. A lot of SMC traders, they literally buying from this order block, yeah? And they will set the stop loss below this low. And watch what will happen now. I see it, I want it, we get it. I still walk with God, but battling demons, and I can't let them. BMW traders got stopped out here, man. I'm trying to live my dream, they're offering peas, I don't want to sell it. Come on, come on. Your stop loss is my take profit. If you want to trade based on the current market price.
So 9:30 open, just begun. Currently taking out sell stops. We do have opposing buy side liquidity resting above these highs. I'm on standby for any signs of a change in the state of delivery, and I'll show you what that looks like. We can get a 1 minute closure like this. We might just have that actually. Okay, I like the way this is closing. Okay, I'm gonna buy this. Order filled. Alright, so I'm long. So here's the order block. Alright, so I want the bearish candle to hold us higher. Beautiful stuff. I want to target that buy side liquidity way up here. Alright, I just added because I'm really liking the delivery on this 1 minute time frame. So far, so good, boys. The power of the magnet pulled price higher. Just now traded down into this bullish fair value gap. Now we should be hitting that high. So now I'm going to move my stop loss to the most recent respected PD array. Let's zoom out a little bit, see what's going on. I like this 3 minute breaker. We have this bullish candle right here. Prior to the drop at 9:30 that took out sell side liquidity, we have them displaced in the 1 minute time frame. You guys saw me enter that buy in the pink shaded area with the bullish order block, and we broke up above. Your eyes go to the bullish candle prior to the drop. So you would blend that bullish breaker right here with this last 1 minute fair value gap before price ran up higher to my overall objective right here. Let's zoom out a little bit more to see if price maybe wants to go even higher. So our next level is going to be up here, this high, and let's see if we can go up there today. So here's my new objective. So I just paid myself a little bit more. Oh, we're fixing to play some Fortnite, okay? My trade is almost over, bud. I know, buddy. It's taken so long, I know. I need this level to hit so I can go play Fortnite with my son. Well, I just hit a really beautiful trade. It's almost over, look. I bought down here, and everything I said that would happen, happened. Isn't that cool? So we're gonna take some off right here.
That's a great trade, Dad.
Dad? It's Daddy! It's Daddy! Look, my level got hit. Alright, Fortnite. Bye, guys! If you guys enjoy these live trade execution videos, let me know.
called high impact news. One of my tried and true rules is never trade on a high impact news day.
Oh fuck.
And
So
we're,
he's
and
warning
we're
us.
full porting this bitch. So I'm obviously not going to trade today because it's NFP, but they gave me 2 racks and we're gonna full port the shit. If we can get into this price range right here, that would be super fire. And get price above this green line and start seeing some confluences, that would be huge. How much money would ideally you want to make? And you can't say something ridiculous because like us 2xing the account probably won't happen, so.
500 would be fire, bro.
We're actually forming a 1-minute SMT. This actually might be good. This actually might be good. Fuck it, I'm getting in this regardless. All right, you're up 13 bucks right now. Damn, and we're not even breaking structure. That's not too hot. Okay, okay. We're up 70 bucks, 30 bucks. Okay, we're going back down. We're cooking 90 bucks, 100 bucks. Yeah.
Come on, come on.
Yeah. Okay, 130 bucks. Let's hold this bitch. We're up 120 bucks right now. Damn, I'm nasty at this. Okay, we're back to entry. We're back to entry. Oh god. Okay, okay. Okay, yep, push up. Lock in.
Push.
Lock in. Go, yeah!
Shit, you got this shit.
170 bucks.
There we go. Easy. Come on.
Oh yeah, we're actually cooking now. 200 bucks, 211.
Let's fucking go.
230. Oh yeah!
Go! Get up there!
Now, if this hits, this is actually crazy. On NFP on a bullshit ass trade. Nah, we're cooking! We're cooking! 260 ball. 260! 260! We're cooking! We're cooking! 300! Take out these highs and we'll. Oh my god.
अंधेरे ढले बुझते सितारे जले देखा तुझे तो दिलों में जान आई होठों पे तराने जगे अरुमा दीवाने जगे बाहों में आके तू ऐसे शर्माई छा गई फिर वही बेखुदी छा गई फिर वही बेखुदी
Definitely loans. Big level from yesterday and overnight. Yeah, I was gonna scale out there, 760, but let me see what happens. I feel like there's enough volume to get through. I'm gonna keep my stop below the 2-minute bar. Give it some room. I use RSI 2. It says we're heading to the top of the range, so I don't know. I don't think we'll go higher than 780. Alright, I have a level at 772. It's the top of the 5-minute range. Or is that 770? 773? Yeah, if it doesn't pull 760, we could start seeing reversal. Just have a pullback on the 3-minute. Alright, we need to break on this candle or it's not happening. Alright, I'm moving my stop. There's a new pullback on the 2-minute. Alright, let's see how it reacts here. 773. That's the top of the range on the 30-minute. So we'll either reverse or go break through because we've already consolidated a little bit. I knew it was going to flow through. So I've noticed when it consolidates before the level, it shoots up. I only have partial there. So because it broke, that means we're in a long. I have another out at 800. I took my other 5 out. I trailed too tight. I wish I probably need to play with NinjaTrader, but I can't figure out, like right now.